Hi, I'm Nilus Mattive from Money and Markets TV. You hear a lot about contrarian investing in the mainstream media, but contrary to what they say, this concept is not just about taking what's currently popular and betting the other way. No, true contrarians consider all possibilities, examine the facts independently, and then draw their own conclusions. If your findings happen to go against the consensus, fine. You still act in accordance with your own research, and you wait for the rest of the crowd to catch on, knowing that you stand to make even better profits by getting there first. In short, being a contrarian is all about conviction and confidence in your own due diligence. Most of the best contrarian investors are people you've never heard of. They manage private money or simply invest their own personal fortunes. But even the few famous contrarians are only celebrated after their huge bets pay off. Take John Paulson, for example. He's the hedge fund manager who made billions betting against the US housing bubble as well as American banks throughout the financial crisis of 2008. But now, Paulson is reportedly loading up on bank stocks. And that brings me to the most contrarian investment idea I've heard for the coming year, introduced to me by my friend and colleague Tom Essay. Tom is currently the director of research at Weiss. He's a former New York Stock Exchange floor trader. He has multiple degrees in finance, and he used to manage millions of dollars for private investors at his old hedge fund. Tom thinks like a true contrarian, which is why I love talking about the markets with him. And he recently told me about a group of off-the-radar investments that came about because of the government's bank bailouts. These special government bailout contracts are not stocks, bonds, preferreds, options, or any of the other categories of investments most people are familiar with. But they have the potential to pay out huge profits. In fact, Tom and I are convinced that they will, because we did our own research and we're confident of its accuracy. Of course, you won't hear about this investment idea on CNBC or in the Wall Street Journal, because American financial institutions and the bailouts they received are universally hated. Heck, the Occupy Wall Street crowd would picket our houses if they heard us talking about these investments. But frankly, I find that kind of opposition comforting, because with contrarian investing, or any strategy, it's important to always put profit potential ahead of what other people think. I'm Nilus Mattive from Money and Markets TV. Thanks for watching.